Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at the large degree trend because yesterday was a great example of how to use the higher time frame charts to define the larger degree trend for your trading. So let's start by looking at the ES. This is an ES chart on a 3-minute chart that we're actually looking at in our training webinar yesterday, and you can see that we had on our chart some larger degree support and resistance zones. You can see it says decision point 15 minute. And this is what we do for the more experienced users. So I'll just go through this and show you how we put these on the chart. If we go to the higher time frame chart, in this case the 15-minute chart, I'll just clear this off and show you what we did yesterday. We go back to use prior pivots. Now this is important because these are on the chart in advance. In other words, they're leading indicators. So for example, here was a pivot low here that was from the day before, so we'd have hovered over that pivot, right mouse click, place the decision point level on the chart. But this would have been on the chart before the market even opened yesterday. In other words, before the market opened, you'd have had an idea of this potential support zone. As the market came down and started to rally up, you could then go on to this prior pivot that would have been formed up at the top here, and then placed a DP off that level there as well. That then gave the ballpark, or the sort of the playing field as we call it, for the large degree trend. In other words, we're anticipating the market to decline and find support at this level. If it did find support, then we'd anticipate the market was going to rally up into the next decision point level. So in other words, after this low came in, we'd anticipate the large degree trend was going to be up. So if we now go down to the 3-minute chart, you can see that these 15-minute levels stay on our chart nicely for you. And as you can see, this 15-minute support zone nailed the very low of the day absolutely perfectly. So this was absolutely brilliant for you as traders. In other words, you had this level on your chart before the market even got there. So as the consolidation initially broke and the market started to decline, once you reach these levels, you'll be anticipating support. And as you can see, that actually held the very low of the day for you. So was absolutely amazing support there. During our webinar yesterday, I was actually looking at this cell here. If I place the analysis on this history triangle, you can see we had a TS1 cell here. And I was describing how this was against the large degree trend, which was deemed to be up off this 15-minute support zone up into that 15-minute support zone. I was talking about this would have been a higher risk trade if you wanted to take it. If you do, you'd want to bring your stop to break even more aggressively, i.e. when it reached the 100% initial risk level. But as you can see, this actually would have been stopped out for a -1R loss. So it's a great example of how you could have avoided an otherwise losing trade by knowing that the large degree trend was up. Of course, as the trend was up, you then would be looking for buy setups, and after our webinar closed, you can see we actually had this TS1 buy setup unfold a bit later in the day. This was actually on a blue STF, so this was confirmed by our trend indicator as well. But remember, for more experienced users, we go to our 15-minute DPs because these are leading indicators. So can you see how this TS1 buy setup would have been in the large degree trend, in other words, up from this support zone into this resistance zone, whereas this sell setup would have been against it. In other words, this sell setup would not have been a good one to take. This TS1 buy setup would have been a good one to take. Let's place the analysis on. The market did chop around quite a lot, but it was generally drifting up throughout the rest of the day. Didn't quite reach the first profit target, but would have come out on the close there for a nice 3.9R profit. So it would have been a very nice profitable trade. So that's what I wanted to basically cover in today's today's video, to show you how to put the larger degree support and resistance lines on your charts. In other words, we go to the higher time frame. If you're trading, for example, 15-minute Forex, you'd go to, say, the 60-minute. If you're trading daily charts, you'd go to the weekly charts. And in this particular example, as we're trading a 3-minute chart, we went to the 15-minute. In other words, we looked to a time frame between 3 and 5 time frames higher. So I thought that was a very, very good example because it was a very clear example of how the 15-minute support zone came in absolutely beautifully and caught the, well, basically gave you the low of the day there yesterday. Remember, this level was on your chart before the market even got there, so it was a leading indicator. That then helped define the large degree trend the large degree trend was then up, therefore you'd been avoiding this sell setup, and you'd have been taking this buy setup here because this was in the direction of the trend. And as we can see already, that would have actually given you a nice 3.9R profit. Remember, we use correct position sizing to vary our number of lots, contracts or shares to keep our initial risk small and under control, but more importantly, when we have profits, they are directly related to the losses. So this was almost 4 times greater than the initial risk. That's the important thing about position sizing. It keeps the losses small and the profits large. So overall, a very good example of how the more experienced users can utilize the large degree trend to then orient their shorter term trades in the direction of that large degree trend.